Hi, everyone. Let's do a sound check real quick. Make sure that you guys can hear me. Please give me a yay or nay. All good. Thank you, guys. Great. We'll start in a few seconds. Okay, let's go ahead and get started. So welcome to lesson 6. My name is Richard Fetchko. I'm the founder and CEO of Altfins, and this is lesson 6 of the Altfins trading education program. Congrats to making it all the way to lesson 6 and investing the time to educate yourself to be a better and more profitable trader. Hopefully this lesson will advance that objective even further. Today, we're going to build on some of the concepts that we've already covered and talk about another trading strategy that has to do with trading ranges or sideways channels. So you may have, I'm sure, noticed it happens a lot of times in really any asset class that sometimes prices just go sideways. The market or an individual coin or security is trading in a sideways channel between a couple of levels that just doesn't seem to be able to break out in either direction. And this trading strategy will try to take advantage, first of all, identify those situations in an easy way without going to 1,000 charts. So we'll build a custom filter as we usually do to narrow down the opportunities, and then we'll zoom in on the actual results to identify the support and resistance level that will basically delineate our trading range. And so some of the literature out there talks about range trading or the fact that prices of securities and coins or cryptocurrencies trade in the range about 50%. In some cases, even some people talk about statisticians talk about 70% of the time we are sort of going sideways, and that the rest of the time there is a clear trend, either an up or down trend. But even if it's just 50% of the time, clearly it opens up a lot of opportunities for traders to take advantage of that sideways market, which otherwise, if you were just going to hold and wait, you may miss out on some of those swing trading opportunities. And that's what range-bound trading is. It's swing trading. We're basically going to be trying to buy at the support level and sell at the resistance level, rinse and repeat. And so the concepts that we'll cover is trading the range and what is the range, as well as the support resistance concepts that keep reoccurring, as you noticed. Those are real pillars of technical analysis. And in practice, what we'll do today is that we'll scan or create custom filters to scan for coins with flat slopes of moving averages. So I've tested various ways of using our filters and indicators to figure out how can we identify those coins or narrow down the thousands of coins to those that are trading perhaps potentially in a sideways channel. And I'll show you a couple of filters, and you may take that knowledge and test and see if you can come up with a different combination of indicators to better pinpoint some of the trading, some coins that are trading in the range. And so what is a trading range? A range is, you've already probably picked up from what we've discussed so far, is that a trading range is when the price moves back and forth between support and resistance zones. And that basically is indicative of the supply and demand, or the buyer and seller situation, that at certain level the buyers are stepping up, they like it at the price, and then it moves up to a certain resistance level where the buyers are paring their positions back or completely selling out, or maybe sellers who have owned this for longer are finding that resistance level as an attractive level to sell their positions. So it's kind of a constant struggle and a war between the buyers and sellers until the price breaks out of the range. If it breaks up, that means that all the selling has been saturated and the buyers are now overwhelming the sellers, and they're desperate enough for whatever. Maybe there's some fundamental reasons for it, maybe some news, but basically the buyers finally soak up all the supply and push the price out of that range. And so the trading range is essentially that. It's a period of, oftentimes, a consolidation period when the price has moved up. Now it's kind of consolidating, going sideways, because at these levels, people have made some money. They're taking money off the table. For example, new guys are sort of new traders are buying it as it comes in, and so during that period, there's a lot of the trading and coins that are changing hands until that supply-demand balance is again disrupted, either up or down. And to identify the range, we look for support and resistance levels, and to do that, we need at least 2 touches on either side. So let's go ahead and look at, this is actually, as of yesterday, a graph of Ripple XRP, and as you can see, it's clearly in the range. I mean, it doesn't take a rocket scientist to see that the price is basically moving sideways. And this is, I apologize, I don't have the timeline here, but this is basically, this is a daily chart. So we're talking about a month worth of data, or at least a month. For the last month, the price has been moving in a sideways manner. And so for us to consider this as a trading range, we need to see a couple of touches on the resistance level. So how do we identify support and resistance? We talked about it in the past. You basically try to connect the swing highs and the swing lows, right? The lows, multiple lows, if they line up on a horizontal sort of level multiple times, when that level is touched and the price bounces, that creates a support level, and vice versa. The resistance level is when the price swings up, but there's not enough demand, not enough buying going on to push it above that level. In this case, it's $1.20, and the selling ensues, and the price dips back down, and now the buyers start buying it up again, and it dips back down. So you got multiple touches here. You got 2 touches here and the 2 touches here, and that for me, that's an established range. That's a minimum for a range, but it is a range for me. In fact, now we've reached $1.20 again. We can look at the platform, see if anything's changed in the last day. See whether the price has broken above the $1.20. Okay, well, it briefly did, but it but it hasn't completely hung in there. So, chances are that it's going to basically retrace again and bounce. Essentially, the resistance will not sustainably break through the resistance and retrace back to $1. I mean, that's our hypothesis here. But the point is that we would be buying it if it does retrace back to $1. That would be our buy signal. So after we identified 1, 2 on the top, 1, 2, in fact 3 on the top and 2 touch points on the bottom, we know our support and resistance level, I think, are quite clear. That will not always be the case. Then we can say, okay, this is a range. If it comes back to $1 here at some point, this is where I'm going to buy it. Now, the other supporting evidence of the range here is, and I always like to keep the 200-day moving average, in the picture. I'll get rid of some of the other noise, but it's the 200-day moving average, right? Let's put in 3-month. You see how the price is really respecting the 200-day moving average as a support area or zone. And that's very typical. And in fact, oftentimes it can be a resistance zone. So it changes, right? That's the polarity principle that we talked about, is that when resistance is broken, it becomes support, and vice versa. When support is broken, it becomes resistance. So the 200-day moving average, when I see that line up with a horizontal level like $1, especially if it's a nice round number, because the round numbers oftentimes are support levels, support or resistance levels, sort of key levels. When I see that line up with a 200-day moving average, that gives me a little more confidence level that this indeed is a key level, whether it's support or resistance. In this case, it is support. So that would be for me an opportunity to get involved, and that's a range that I could possibly trade for a while. Now, let's go back to some of the theory we want to cover. Here's another example of a trading range in Terra Luna. This is from, if you look at May through July. May through July, this coin for 2 months was trading in a range, right? And again, we have multiple touch points on the support and resistance level here, one on the support, another one on the resistance. And notice that the 200-day moving average acted as resistance in this case. Then we touched support again, it bounced off, it didn't quite reach the resistance and came back to support, bounced off. So this is where we would have been buying based on this trading strategy. And the rules is that after we establish the trading range by observing 2 touch points on the top and 2 touch points on the support and the resistance level, the next time it comes back to the resistance level, we'll be buying it here. And then next time it reaches the resistance level, we'll be selling it there. Then it came back, it didn't quite come back to the support level, so we would probably not have bought it here. And then it just kind of broke out and went on from there on. But we wouldn't have been in this trade at this point. Our trade would have been from this buy to this sell, which was from 5 to 750, so about 250. I mean, it's a solid 50% gain. Now, let's look at some of the other important theory points, which is that generally speaking, as I mentioned, 2 touches on the support and resistance level are enough for me to establish a range. It's a minimum, but that's sufficient. Now, the more points of contact you observe, the better. The more established that range is, the more robust or significant or strong that range or the support and resistance levels become as well. And then the last thing that I mentioned here is that ranges end when a breakout occurs. And we'll talk about breakout trading strategy in the next lesson, lesson 7. But obviously, all ranges come to an end. And we will talk about, one, the risk management around when because we'll be typically going long, we'll be buying these ranges. So our risk is that it does not bounce off the support, it breaks through the support, and that's the risk that we have and that we have to manage. And we'll talk about how. The risk to the upside is that the price breaks out and continues out of the range. That's more of a risk of lost opportunity, because this strategy dictates that we sell at the resistance. So we would not participate in the breakout from there on. You know, some of you or some traders may like this strategy. I think there are some really interesting positives about it, and others may not like it because they really love that breakout potential, which we'll talk about that trading strategy in the next lesson. So let's go ahead and build some custom filters to help us identify these opportunities. And the way I structure my filter, and again, you may play around after this to see if you can build your own and modify the one that I have, perhaps. Certainly test and see what comes out. But essentially what we want is a coin with price that has flatlined, right? A range is kind of going sideways. What that means, if I go back to, what do we have, XRP here? What that means is that the moving averages in the last 5, 10, 20 intervals, in this case days, will probably have also flatlined. If the price is going sideways, then the moving averages will also sort of start flatlining. And so let's add to this chart the moving averages, the 20-day, 10-day, and the 20-day. Okay, so it's these two. As you can see, if I take a bigger look here, right? Made big swings, but now it's just kind of really flatlined with very small swings up or down. That makes sense. When the price goes sideways, the short-term moving averages will also flatten out. And so the filter that I have been using to identify ranges uses this exact phenomenon, which is that I'm going to build a filter where the moving average trends. Now, this is not the moving averages, but actually the slope of the moving averages in percentages. Is the moving average trending up or is it trending down? So I'm looking at moving average trends that we calculate. In this case, I want to say that the moving average for the last 10 days is between -5 and 5%. So it hasn't, it's up and down, it's in the range of sort of sloping slightly up 5% or slightly down -5%. I want it to be in a very relatively small, tight range, flatlined. And moving, simple moving average for 20 days, same thing. I want it to be flatlined, ±5%. Okay, now I'm down to about 198 coins, but I still want to trade with the trend. So if I go back to this presentation, the next important filter criteria is that I still want the long-term trend to be up, right? I want coins that are still going up, but have taken a pause. They're consolidating, they're moving sideways until that buyer-seller demand-supply balance is sort of absorbed and resolved, and then it continues to go higher. More than likely, that's not always the case, but in any case, but I still want to, if I'm going to be buying these coins, which we will be, I want that to be in the trend, in the general sort of big picture trend, and that will increase the chances that I will be right, that the price will bounce off of that support and go back up to that resistance. So, I wouldn't really dare to do this strategy, and really any, if it goes against the overall trend. So to designate that I want the coin to be in an uptrend, I go to these trend ratings that we have, short-term, medium, and long-term trend. And I'll say the long-term trend is up. I don't need the short-term and medium trend to be up, because clearly, the more than likely they're going to be neutral or maybe slightly up, because we are looking for coins that are flatlined. So on the short-term basis, they'll be flat. On the medium-term basis, very likely to be flat as well. So really, I just want to make sure that the long-term trend in this case is up. And that reduces the number of options or coins to 63. So before I added that, we had 197. And when I add that, we have 63. So that tells me that a lot of those coins that have flatlined are actually in a downtrend. But we have 63 that are also in an uptrend. And then we add our typical minimum market cap of 5 million. So we eliminate some real tiny illiquid coins. And I'm going to now save this filter and say this is range up. Great. So now it's in my saved filters. If I want to ever come back to it, it's right here. Great. So no, here we go. Not surprising, Ripple is among the results, right? Algorand, interesting, Quant, a few others. We'll take a look at that as well. Now, this is one way to do it. I'm going to build another filter that's also in the presentation, and that really just uses our trend ratings. It may very well produce very similar results, maybe a few others. So nothing wrong with trying to take a few different approaches so we don't miss on any opportunities. So this case, I'm going to say, as I said, short-term trend is neutral, makes sense because it's flatlined. Medium trend also neutral, and the long-term trend is up. And my minimum market cap. Now, this is way fewer coins. I'm only getting 5 here. And let's see, Electronium. It's not on this list, it doesn't seem like. IDEX. Okay, so maybe we got a few others that we didn't catch on the first filter. And we can take a look at the charts here and see if it produces what we're hoping to see. All right, this not a clear horizontal range here. This one, not that great. I think the first filter is going to work a bit better. This is probably some kind of a, well, I'm not sure what that is. This one here, this is a possibility that we're seeing a range here. You can spot it here. I'd say around $1.50. Wow, that's really heavy. Let's see. Let's lighten up on that. $1.50. You've got multiple touch points here, and then around $1.10 or so. Got multiple touch points here as well, right? You see that now? Clearly, there was a big breakdown from this range. But it does seem to be a range. You've got multiple touch points in the last, how long is this for? This is really since August, 3 months. So let's see, you've got one support touch point. It's okay if it breaks above that. It doesn't have to, it's never going to be just perfect sort of touch and reverse, there's going to be some breakouts, especially okay on the resistance line level, but another touch point on $1.50 here as well, $1.10 or so here, right? There's plenty of touch points in this range. So I'd say we're back to the support level, and if it comes back to that $1.10 or so, this might be a good buying opportunity for the range. That's the results for this, and we've got plenty to look at on this one. Ripple, we already talked about. Algorand, let's see if we spot a range here. Not quite on the support level. I can certainly see the resistance, right? Clearly $2 has been the resistance that's been tough to break for the last couple of months, but the support level is rising. And in fact, this looks more like an ascending wedge. Okay, I'm sorry, an ascending triangle, my bad, a ascending triangle. The buyers are getting more and more desperate. The dips are getting shallower and shallower, in fact, right? The buyers are willing to increasingly buy the dips higher and higher until more than likely there's going to be a breakout here. Typically ascending triangles in an uptrend resolve in a bullish breakout. We'll talk about patterns trading in the future classes, but this isn't necessarily your range that I could really trade here. This one looks a bit more promising. Let's look. So my top is, I didn't quite draw it well. Let's start on this end here. All right. So it's around 325 or so. And my support is perhaps even clearer. We got multiple touch points on support level. So I'd say, yeah, there's a range here. We can zoom in a bit more to see better. Let's just zoom in on this, oops. This portion of the graph. All right, so if you look at some of the highs here or closing prices, you know, highs were about 325, 329, 330, 344. So I'd say 325 or so is a decent resistance. And then about 260 or so is our support. Now it gets breached at times. Again, that's fine if you get some breaches on top and the bottom of the support and resistance lines or areas. That's fine. But clearly this one's trading in the range for the past month and some. So this is tradable. In fact, it's down at a level where we should be buying it. Okay, let's we'll put on the trade in a minute, but let's cover a few other important theory points. Clearly, the next step is identify horizontal and support resistance zones. We demonstrated that. We talked about how to do that in the past and again today. And the rules are that you buy near or at support and sell near or at resistance. Once you determined which support and resistance levels make up the range, then that's where you buy and say you buy at support, buy low, and sell high, sell resistance. Now, here's why I like the range trading strategy. I mean, there are some advantages and disadvantages. Now, on the positive side, like I said, markets tend to range at least 50% of the time. So we will find these opportunities rather often. So there are many trading opportunities. More importantly, there are clear entry and exit points, right? Once we determine the range, the support and resistance levels, you know that that's what you're going to stick to. This is where you buy, this is where you sell. A lot of times in many other trading strategies, you know, your entry and exit are points are not always clear. Depends on something happens, right? If there's a crossover, MACD, or whatever it is, it's not always so precise, so predetermined as it is in this strategy. You know exactly how much you can make. So that's the other positive, is the fact that you know the clear price target. Your price target is resistance. You know, in the case of Ripple, or even here in this case of Quant, we know there our price target is resistance, which is 325. And so we know also we can clearly, precisely calculate our price target and also our upside. So if I'm buying it at support, which is in the Quant's case, it's 260, I believe. And I believe that the price target is 325. From 260 to 325 is $65. And that's how much I can, that's the max profit that I have, right? And so once you have that, you can also then calculate your risk reward ratios and your downside potential as well. So we typically, where we put the stop loss is about halfway, sorry, half of your upside will be your downside. Meaning, in this case, if our upside is $65, because from 260 to 325 is $65, then my stop loss, I'm going to place it, half of 65 is 32.50, right? So I'm going to say I'm willing to lose 32.50 from the 265. So it's going to be about 227.5, somewhere here. Okay, so this is going to be my stop loss. And again, the calculation, and we'll go over that in an Excel spreadsheet actually, but whatever is my upside, whatever the width of the range is, if we use the example here, if my range is $10, so resistance is $10 away from support, that's my range width. If my range width or upside is $10, and I want to have a risk reward ratio of 1 to 2, that means for every $10 I'm willing to lose only half of it, which is 5, then I can calculate my stop loss basically by taking the support level minus $5 is going to be my stop loss order, and that gives me risk reward of 1 to 2. And that also means that even if I have a 34% success rate, if I'm right 1/3 of the time, then I can break even. If I'm better than that, then I'm making money. And typically this strategy should have a 50 to 60% success rate. So now some of the disadvantages, and we'll go over the math in a minute. Here, look, I promise I have some Excel spreadsheets to go over, but let's look at some disadvantages. You know, some people don't like the fact that you have limited upside potential, right? Some traders love to see the breakouts and go to the moon. So it's not for everyone. I find it quite actually reassuring, or in some ways positive, that I know how much it gives you to your strategy very precise parameters. I know how much I can lose. I know how much I can how much I can gain, how much I can lose, and what my risk management is exactly, and what my sort of odds of success are, and so on. But there are traders that love the unlimited upside. This is not one of them. Markets do not always follow existing range limits, obviously. So that makes it a little difficult sometimes to set your support and resistance, or buy and sell. But I think that's a minor sort of difficulty that you can overcome, and basically with patience and looking at the right situations where those support and resistance zones are clear. If you exercise that patience, then you will find those situations where it's very easy to spot the support and resistance levels. Breakouts against the trade direction leads to losses. Yes, that will happen. But if it happens even 30 or 40% of the time with the right risk management, if you put the stop loss where you're supposed to, even with 40% of the time being wrong, you're still making money. Even with 50% of being wrong, you're still making money with a 1-to-2 risk reward ratio. But you will have losses. But we know that that's the case with any trading strategies. And trading really is about probabilities and stacking the probabilities in your favor, and also doing lots of small trades, so that the statistics, in this case, the 50-60% success rate, if we want to achieve that, we can't just do 2 or 3 trades. We have to do tens of trades so that the statistics will actually play out. Market doesn't always hit the price target. That's okay, and the traders cannot always clearly identify the range. That's kind of the same situation, or the same difficulty that we discussed about setting the right support and resistance levels. But with patience and some experience and practice, I think that will become easier. So those are the disadvantages. So let me explain the math. And this kind of goes into the future lesson of risk management. And this is going to be actually the major topic of the risk management lesson. I think that's one before the last lesson, which is lesson 9, which is setting the right risk reward ratio, which has to do with what your upside potential and what your downside potentials are. And so with risk reward ratio 1-to-2, what that means is, let's say, hypothetically, this could be actually the Ripple example. I believe Ripple, the range is between 1 and 120. Let's look at it. Right, exactly. 200-day moving average right at $1. Sweet. This is my range, 1 to 120. I would be buying at $1 with the assumption that it will bounce back to 120, which is where I will sell it. So that's my clear support and resistance areas, right? 1 and $1, $1.20 that is. Therefore, my upside, the range width, is 20%, right? From $1 to $1.20, that's the 20% potential profit. Now, my downside, as I said, the rule is that you set your downside at half of what your upside is. So my downside is 10%. So where will I set the stop loss order? If it's half, if my upside is 20 cents, then half of that is 10 cents. So I'm gonna put 90 cents, which is, this is 80 cents, is $1. So 90 cents somewhere in the middle here. This is going to be my stop loss. Okay. And then, so what that means is that even if and I'll share this Excel spreadsheet with you so you can run the numbers yourself. But even if I have a success rate with this setup, with limiting my downside to 10% and my upside clearly defined as 20%, even with a 33% success rate, I'm breaking even. I'm not making money, but I'm not losing it. But look what happens if you have at least a 50% success rate with a trade size of $1,000. And if you do, then on one trade, you'll make $50, which is basically, on average, you're going to have a 5% gain, right? $50 on 1,000 is 5%. But on 100 trades, you could make $5,000. All right, so over time. So my point is that with this strategy, even with even if you're 50% of the time wrong, you're still making money, and that has to do exactly with the risk management, identifying the right opportunities with the range, right? That increases your chances of success as well. So I do think that with this strategy, 50 to 60% is not is very possible. Is not a big stretch at all. Hang on, we got a question here. All right, yes, 90 cents, exactly. That's where the stop loss would be for the XRP Ripple trade. And I have an Excel spreadsheet. Again, I'm happy to share this with you, but it just will give you some other ways of. So let's do another one here. I think quant, right, was one that we talked about, where if we think that the range is between 265 and 325, okay? So I'll put in 265 my support, 325 is my resistance. So upside is 23%. Therefore, half of that is my downside, where I'm going to put the stop loss. So that amounts to be $205 is where I'm going to put the stop loss order. 205. So it's just about just a little higher than the 200 level here, which actually works out quite well. But anyway, and so what that means is that 33%, if I'm right only about a third of the time, then I'm breaking even. If I'm right 40% of the time, then I'm already making money. 50% of the time, oops, that's the wrong field I changed. 50% of the time, and so on and so forth. You can start dreaming. But that's how this Excel spreadsheet will help you with this trading strategy. And also that's the one aspect that I like, because with other trading strategies, I mean, you still can go through this exercise. You determine where your profit level would be, where your stop loss should always be somewhere where you can sort of in advance determine your stop loss. But in this case, I think it's a bit easier to do that, to determine your risk reward, a ratio, your potential upside, your success rates, and so on. I hope you see that and understand that. But you can go through the archive again and kind of listen through these steps as well. But to help you kind of acquire that and make that a real easy concept to understand, because this is risk management 101. It's really important that you do that exercise and have that spreadsheet. Okay, in terms of the execution, we've kind of talked about the hypotheticals, and we'll go through the actual example. But one thing I do, so first of all, once we have these two filters, if you like it, create an alert, right? And that way you get an alert of all the coins that fit this criteria if you want to. Now, in this case, we have 2 pages worth of these. So that may be a long list. And maybe you find a way to narrow that down even further. But secondly, in terms of the execution, right, XRP is not quite where we need it right now. It's actually at the resistance level, right? So we're hoping it gets rejected, comes back to $1 where I want to buy it. Well, what I could do is I could put a limit buy order here and just wait, and maybe it comes back down there and executes. Or I could create an alert to alert me when it gets close, and then I start paying attention. I kind of prefer the second method, because there could be a situation where for some reason it just gaps down like mad, right? And blows through the dollar, and I get executed and I'm buying it at $1 when it's already, you know, and just because it's a big red candle that goes all the way to 80 cents or 60 cents or something, you know what I mean? So I would prefer to kind of place that limit buy order when the price gets closer and maybe even gets there, so that I am aware of the context, the situation, that nothing maddening has happened, and I'm, you know, just buying coins left and right when the whole market is tanking. So to do that right now, you have to go through a couple of steps. We're going to make it much easier to do this. Oh, sorry, not that this is not something you need to do, but basically go to signals and filters. Say this is XRP, and I want to be alerted when the price is below, not quite $1, let's just say below 105, right? Okay. And now I'll create an alert out of that. And I'll come back to it when it happens. We have questions or two? That alert works only on desktop, or can I receive it on my phone? The alerts will come, yes, both to your alerts section here, notifications, but you will also receive an email. And in the future, you'll be able to also receive it through a Telegram channel, as well as our mobile app, which we're launching next month. Next question. Oh, someone's yeah, someone's answered my question. I mean the question. So thank you. Let's see. Do we have a few minutes to analyze the move on the trade we did with waves 2 days ago? Yes, we can do that certainly. So let's go ahead and do a trade on this strategy as well, so that we have some fun here. Going back to the screen results, the filter results, that is. So quant was looking interesting. Let's look at a few others. Ideally, I really like it when the support level lines up with 200-day moving average, like it did just here. Now let's see. Is the support and resistance areas, are they super clear? It could be evolving, but we don't have quite 2 touch points. I'd say maybe on the resistance area we do. So let's say resistance is around $9. Support is clearly here, but it really hasn't touched that support a couple of times for me to say this is a range. Let's look at this REN. If that's any better. No. Possibly, yes. If we say that this is your resistance, right? It's shot through it several times. Look at those long wicks on the top. The sellers step in every time the buyers push it up. The sellers pummel it with supply, and your support could be around 50 cents. We've had a couple of touch points on either side, so this could be a valid range, 50 cents to 60 cents. By the way, you could also go to a lower time frame. This works on any time interval. So if you don't like waiting for days, you could go to an hourly time interval and do it on an hourly. on an hourly basis, and you'll have basically quicker signals, but your upside and downside will be also smaller. Typically, the ranges are then narrower. All right, let's try one more or two more. Get rid of these. Polycom. Well, not that clear, not that obvious. I'd say. No. Oh, I'm sorry, that was Kava. Polycom is this here. No. Next one. That's looking a little more promising. So if we say 40 cents is the resistance, which had a couple of touch points, and the 200-day moving average lines up nicely with about 30 cents or so. We've had a couple of touch points. Yeah, this is a good range. Unfortunately, we're not at the support level. We're closer to the resistance level, so it's not something that I can pull the trigger on right now. And let's do last one. ONG. This one is also, I think, quite valid. I think $1.50 is your resistance. Again, look at those wicks. And on the bottom, beautifully lining up with $1 support is your support. Now, where's the price here? $1.25. Wow, because we had a touch here. I would probably put a limit buy order at $1 and see if it wicks down there. But you know what? Actually, I would buy down there, but it's not there. So I will create an alert, and then we'll probably do a trade on that quant, which looked decent. Alert for OMG. Oh, my bad. Ontology gas. Maybe some of you have heard of it. ONG. Okay. I say I want it again at $1. So when price gets under 105, alert me. ONG under 105. All right. Now, I did say that quant looked pretty solid in terms of the range. Oops. Here we go. At 265, right? Okay. So let's go ahead and go to trade. Oh, by the way, we need to make sure that it's on the exchange that we can trade on. So you can do that, add to your filter. In my case, it's Binance. Let's see if quant is there. Yep, it is. It's still on the list. Our lucky day, maybe. All right, so 265. And I believe, oops, ONG, okay. 265. Oh, my bad. Not ONG. Quant, right? Quant. Okay, it's actually dipped below that 265. We can look at what's going on an hourly basis just to see the action. Now, some traders will actually wait for it to bounce back to that support, just above that support level, to give you comfort that it's actually going to be bouncing back. I feel like that may make miss me some opportunities. I mean, if you have the time to watch it, great. So let's go ahead and look at the order book. Wait a minute, this is not the right order book. Some reason order book is still ONG and not quant. So that's a glitch. Now let's see. Either way, I'm going to put a limit price 260. Okay, limit buy. I want $1,000 worth, so it's about 4 units. And I should get executed immediately. Yep, there it is. And now I can say a stop limit order. And what do we say? It's my upside. My upside is 325. Then my half of the upside, or half of the 23%, is 11%, which means that I take the difference is $65. I take half of that, and that comes out to be about 205 is my downside, my stop loss. Wait a minute, no, that would be, that's an error actually. Should be half of that, so 235. That's right. I just caught an error in my formula. I prepared that yesterday, so I apologize for that, but we fixed it. So 235 is where I would call it quits. The trade has gone wrong. In this case, what you want to do is the limit price is the price that you're selling it. Stop price is where basically triggers it. So I'm going to put that slightly higher. All right. Lack of funds in the account. Are you sure you want to? Wait, stop limit. Oh yeah, of course, because I don't have because of the fees on on the exchange. I don't quite have 4 units left anymore. I only have 3.996. All right, fair enough. That should be good to go now. Okay, so I should have an open order right here. Stop, sell, stop limit order, and then I can also set a limit sell order at the resistance level, which is 325, right? So I want a minimum of 325, and I want to sell everything that I have. Okay. Oh, once again, wait a minute. Opa. My order. Oh, okay. Right. Because I have a sell stop limit, I can't put the take profit level. So order. So I have to actually watch that, put an alert, create an alert to alert me that I've achieved my resistance level of my profit, and I need to then close that order manually. So quant, my bad here, quant, instrument is quant. Price, when it gets to above, let's call it 320, just slightly ahead of the actual profit target, I'll get an alert to close this position. All right. Cool, so that's it. Let's take a look at waves. So here is where we bought it. We bought 40 at 26.58, right? We thought it was way oversold. It's still way oversold. Still way oversold, and our support area is $25, I believe. So we still think this is a valid trade. Slightly going against us, but you know, small difference so far. But it's still way oversold. Still think that it should bounce off of $25 support level. And you know, my upside is $30 or more. Still in the uptrend on the long-term basis, neutral on the medium basis. My 200-day moving average is not far, 2174. Worst case is that I think it stops there. It gives me at least a pause, a moment to think about my options if it does get there. Hopefully that helps as well. Guys, any questions on this strategy or anything else? Great, I don't see any questions. It's 5 o'clock. Well, it's 5 o'clock in my time, but it's been an hour. So again, I will make sure that the recording is posted along with the notes and this Excel spreadsheet. I will probably email you directly to your email addresses. I think it's a good tool for you. Can you explain stop limit orders? Yes, I'm happy to do that. So stop limit orders are orders that execute with a couple of things. So when the price goes down and you have a stop limit order like we do here, right, for quant. In this case, so what I have here, and I don't have maybe all the information here. Let's see, limit price, stop price. Here we go. Now I have it here. So what this means here is that if the price goes down to 240, it will trigger a sell limit order. So the stop price is sort of the trigger price. If the price dips below 240, the order will be submitted to sell with a minimum price of 235, which is the limit price, okay? Because when the price is going down, the 240 may be breached and you may not be able to sell it at a minimum for 240 anymore. That would assume that the price bounces above to 240 if you had the limit price at 240 as well. So the stop price typically has to be a bit higher than your limit price that you're willing to sort of take as a minimum, okay? It's a bit different from a simple stop limit or stop sell order. A stop sell order would be just say, hey, if it goes below this price, just sell it. No matter what price you're gonna sell it for, I just want to dump it. With the stop limit price, you're still trying to have some of a controlled exit in that I don't want to just take any price. I want to take at least 235, which is my limit price here, but I want the trigger to be 240. I hope that helps. There's actually a pretty good, Binance has some pretty good tutorials on this particular order type. I recommend checking that out as well. Maybe I'll put that in the slides as well so you can access it. Okay, everyone. Appreciate your time again. Happy to answer questions. Email me at invest@altfins.com. Otherwise, we'll see you next week on Tuesday, the usual time, with the lesson 7, which we'll talk about trading breakouts. And I hope you have a fantastic weekend. And I hope you have, enjoy this trading strategy and start with small amounts. Again, don't bet the farm on any of the trades ever. It's all about statistics. So you want to do a lot of small trades so that the statistics eventually work out in your favor. All right, everyone, have a fantastic rest of the day. Good luck trading. Thank you.